Hi all and welcome to another video from TCM Education. In this video we're going back to our original screener. We talked about it I think plenty of times. So stocks above $10, stocks that their trading range is above 10%, and stocks that trade more than 5 million shares. And that's the list, basically yesterday's list. Yesterday was June 23rd. As you can see, according to this screener, which actually requires a lot from stocks. First of all, volume above 5 million shares, that defines a lot of stocks, but the combination of volume above 5 million shares and the intraday range of above 10%, that's basically what makes this screener so effective. Because we're looking at, on one side, great liquidity, on the other side, great intraday range. And the combination of great liquidity and great intraday range will give us most of the time, well, not all of the time, but most of the time, candidates, not a lot of candidates, which is, you don't want a lot of candidates, because then you have, you're spending too much time choosing between them. And not very few candidates, because in that case there won't be a perfect fit. So out of those 20, I'm not going to do a video about how many really fit, okay, but I'm going to do, and we're going to go here and look at the normal stocks. I don't have to go to CDTX, which is up, closed up 113%, or basically at Age USA, which is probably Hawks, and closed up 25%. Let's go to the basics. Mobileye. It doesn't get more basic than Mobileye. So what happened in Mobileye yesterday? Let's look at the daily chart first. That's the daily chart. Not very impressive, to say the least. So the stock is moving sideways. Yesterday it had a great day. Basically, it didn't start with any gap up, so it was very hard to observe it at the beginning. But let's go ahead and watch the intraday chart and see if it was feasible to trade it. Okay. So that's the stock, and this is obviously the cutoff. So we started here at 1470. We started at 1470. It's not on our watch list. Obviously, the stock is not developing any range, and it's not on everybody's watch list. At one point, the stock moves up 3 or 4% and comes to this perfect entry at 1520. Why is this a perfect entry? And if I have to address, is it on our screeners here at 1520? No, it's not. Okay, so this entry at 1520 is not feasible for us. Why? Because it's definitely not on our screener yet. So that's the entry, 1520. That's the stop loss, 1510, in that ballpark. Perfect bull flag formation. Perfect. I wish we can find many bull flags like this. Okay, and then the stock continues higher. Now, by the time it reaches 16, it's clearly on our watch list. Okay, so now, hold on a second, guys. Let me add the VWAP back on the chart. Here it is, the VWAP. So now, once we observe it and it is at this 16 level, we have to ask ourselves, can we enter at 16? And if you can decide that you enter at 16, do it. I just don't see anything normal when it trades here at 16. Pullback is more than 30 cents at one point on this spike. If you try above 16, you see that it doesn't move above 16 basically. It sits under 16, then drops 60 cents, and this is maybe an area where you can buy, but clearly the VWAP is I think where you can enter the trade. Or you enter back at 16. So you have an option to enter at 16. The pullback is very fast, and so is the reversal. But there is a time frame here anywhere between 1575 and 1560. That's 15 cents. That's the 1% pullback that I was talking about that we can afford to risk. Okay, so if we go long 1575, let me draw it on the chart. 1575. Here it is. If we go long 1575, the stop loss is here at 1560. That's the 10 cent, sorry, the 15 cent risk, which is the 1% risk. Again, you need to focus on this stock. Or you go back again and enter at 16. In that case, you have a way bigger stop loss. And the stock ends at 1650. So the difference is, if you're willing to buy at 16, take more risk, or you buy at 1575. If you buy at 1575 and close at 1640, that's how much is it? 40 and 25, 65 cent winner versus a 15 cent risk. That's 4 to 1. That's 4 to 1. Again, not optimal, not amazing, but take a look at this stock. Great liquidity. You're not entering obviously early in the morning on this beautiful bull flag formation because it's too early and you're not even aware that Mobileye is on its way up. And who's watching Mobileye? None of us, okay? And then this reversal here is not tradable because it trades too fast. And no, if you say it, fine, but most of us won't be able to focus only on Mobileye and enter the trade in this between those levels. Not happening. So let's ignore that and stick with you know, what can be done. VWAP entry, risking the 1% that we're talking about, getting eventually the trade into the close, or maybe opting for another break over 16, which I don't think this is you know, a great entry because it doesn't have a clear stop loss. Okay, so actually the stop loss here is 25 cents or maybe even 30 cents versus the 15 cents, which is 100% more. So again, analyzing this stock, very, very simple. Normally things are very simple when we're talking about Mobileye. So that's one stock that we analyzed out of the list. Let's go to another stock. Back to our list, and I hope I will be able to do it in the next 6 minutes. So that's the list, and let's talk about. Okay, Circle will be too complicated. OUST. Yeah, let's go with the. We talked about this stock before, but let's see what's going on in OUST. Wow, what a wild chart. Okay. So, believe it or not, this stock opens actually with a gap down, then moves higher like crazy, and basically I'm guessing that once it moves over 22 or 22.50, it's already up more than 10% and should be on our list. Okay, intraday. I'm not talking about the range because the range expands, but then assuming you don't take this breakout, and if you take this breakout, you have a small chance of making a winner. Obviously, you can get into a big loser if you're not taking care of business, meaning with a stop loss. But the trade will be after this huge pullback. So the trade after this pullback, if you're still watching the stock at 22, let's see the entry at the round number 22. And the stop loss will be, hold on a second guys, let's see if it fits the strategy, 21.71. So that's 30 cents versus the 22 cents, which is the 1%. So a bit steep. I have to say that this is not turning out right. So okay, according to the strategy, we cannot take this trade, and the reason for that is that the risk on this trade is, according to the chart, is 30 cents versus the 20 cents that should have been our original stop loss. No can do. We cannot take this trade. And then the stock obviously moves higher like a bullet. Maybe it had to do with the pullback in the market. Yesterday we had news coming out of the Middle East, so that was the bad news. The move up was the good news. Too bad. So, okay, no trade here in OUST. Let's move to another stock, BKSY. How is it possible? This stock also is opening down with a gap down. Okay, so that the stock is opening with a gap down. Then it shoots higher, and again the question is, where do we get to see it on our watch list? So it starts basically at 14. By the time it moves over 1550, it's on our watch list, meaning 10% up. Now the question is again, where do you see an entry point? I have to say that again, I'm looking at the pullback and the involvement of the VWAP. So if I'm looking at 1540 or 1545, we are dealing with this pullback again. So this pullback is 45. Let's call it a 1540 entry, and the risk is 25 cents. Okay, no can do here either. Okay, guys, too bad. So 2 stocks out of 3 are not fitting the 1% strategy. Therefore, we cannot trade those, despite eventually succeeding and closing at the highs of the day. But that's let's not give them credit. Maybe it's because the market closed at the highs of the day. So that's 2 out of 3 that failed, 1 that delivered. I have another stock that I can analyze in the next couple of minutes. Let's take a look at ZETA. ZETA. Basically the same. Oh, okay, sorry. This one is totally different. Why? We started up with a huge gap. So this stock is immediately on our watch list, and then it moves higher, breaks this 1650, trades to almost 1770, pulls back, and now on a pullback, our job is to find an entry on this pullback. And the question is, where? Can you find an entry on this pullback? Let's look at round numbers, like 1650. Yeah, this one fails. This one fails at 1650, and okay, and comes back to life at 16. Okay, still have a couple of minutes here. So that's the 16 entry. And let's see the stop loss here, which is important. Okay, nearly fits the strategy. So if the risk is 16 cents, here the stop loss is 18 cents. We can live with that. Okay, so on this entry in ZETA long, ZETA long 16, we end up with a 18 cent stop loss. Let's round things up to 20, and overall a move of 80 cents to the into the close, and at one point it even goes over 17, which is a $1 winner. So that's a trade that we can live with. Clearly we can live it with. $1 on this 20 cent risk, which is a 5-to-1 risk reward. Okay, guys, maybe it was very fast, but we covered 4 stocks in 14 minutes. I hope it was illuminating enough. If you have any remarks, please post them, and I will try to reply. Please share, and more important than anything, share this video with your friends. We'll see you in our next video.